Hello, everyone. Welcome to today's session. Let's get underway here. Market conditions. Market conditions continuing to be bullish right here. It's really a strange market right now because we're seeing really a push higher here in this current uptrend on S&P 500, seeing momentum push to that upper level and breadth not participating at all. This is starting to get pretty bearish looking in terms of a blow off top. We typically get momentum back up above this sentiment level and not a lot of participation right here. We also saw we get stopped out and then they just kept going. So stop losses are so critical because stocks can just completely get obliterated. In fact, let's take a look at let's see what was NG. This was one of them. We had a stop loss here. Once it starts sliding, just starts moving. There were a couple of them that had dropped 15, 20, 20%. So it can happen pretty quickly. And we're seeing that really across the board on some of these other indexes as well. Really the NASDAQ, S&P 500's even not holding up that great on the buy sell ratio. NASDAQ's the only one. These 38 stocks that are right here, they're about the only ones to own, honestly. Everything else is starting to roll over, starting to move lower. And we've got NVIDIA and Broadcom and Micron and Qualcomm and Western Digital, Applied Material, these Microsoft, Apple, these are really the only companies that are holding up the market right here. And we'll see what that means going forward, but we certainly have some weakness in the market right here. Buy sell ratio has already been weak. This is that other indicator saying the overall market is actually quite weak in terms of the number of stocks that are currently in downtrends within a larger database than maybe just S&P 500 or NASDAQ. We also have sentiment, which is now at the upper end of this range, 88. NASDAQ was well above that. NASDAQ was up to 91. So we're getting to those ranges where we are unsustainable. We're going to have some kind of a retracement or a pullback. These are the areas to be preparing for that in terms of allocation of risk, or sometimes the market will naturally help us make those decisions in stop outs, and as long as we make sure we have those stops in sound locations and we're continually moving them higher, there's going to be market scenarios where we get a flush of stop outs, and that can happen in addition to selling into the strength. We want to sell into some of the strength right here to rebalance, moving some of that cash back over to, or excuse me, moving some of those some of that equity value back over into cash. This is the chart of the S&P 500, and really nice chart pattern here, nice and clean. We're at the upper end again, that extreme. We've got some nice momentum to the upside, but we've got just about every indicator saying that we're due for some kind of a pause right here, at least in terms of the market as a whole. There are going to be this handful of stocks, even these muscle stock groups. There's going to be a handful in here that are moving higher. Well, and what's interesting is we can get a lot of these really high-ranked, quick-moving stocks. This was another one that stopped us out today, TSHA. So the risk of taking some of these smaller trades that are moving quickly is getting higher and higher and higher now. We're seeing that on a day like today when some of these really drop and you get really mass selling, and then you start to get stop outs. We had a stop. In fact, the stop here was at 340, so this one also stopped out with a small gain. I believe we bought it right here. It had moved up. This really, and these kind of market conditions, when we say things should happen, this kind of a pattern should have held up right here. So as there, obviously there's news items and there's different things that are happening that a stock can just move lower for no reason other than maybe it's just time to be selling. In this case, that's, it's got pretty large volume right here as well. So there could be some news items there as well. But we're seeing those names, those, in this case, you've got generic medical drugs. They were moving pretty nicely here this last month. We're seeing a handful of those start to weaken. So the weaker side of these stocks, these real aggressive, high risk trades, the market is saying that it doesn't want to participate much in those right now. So again, that's just another clue as we're rallying into this strength to say, what kind of allocation do I want right here? Do I want to try and and try and get more upside out of this. Remember also that when markets retrace and markets start to move back down, sometimes the strongest stocks lead the way down as well. They've gone straight up, and they can, then you start that selling panic. You get the initial sellers, then you may get people that have jumped into that trade towards the end of that range. In fact, let's look at which one was I looking for? I wanted to look for NVIDIA right here. So NVIDIA having another strong day today. There are a handful of stocks that are moving strongly as well and still in that zone. And this is where all of the money is flowing to. These guys have so much capital spending coming into their company because of the chips. Really anything semiconductor is moving today. You've got Broadcom that had a massive run up here as well. It was already a pretty pricey stock even going into that momentum. And you're seeing some of those names. Really, that's it. That's the only thing that is moving, and that is not constructive or conducive to positive sustainability of more upside right here. So caution is certainly warranted. You're seeing the Russell 2000. Russell 2000 is really these small cap stocks. It's down. It's got a sell signal here as well. So you're seeing that group of stocks that has not participated in this uptrend, they're still lagging. That's money's going into just where all of this capex spending is going into these really large names, and we're seeing that really be the key. So in terms of fine tuning and saying, well, okay, if markets are going to continue to head higher, then how should I be allocated? I would be focusing on these upper names here that are moving, anything in that buy side, S&P 500 names, NASDAQ 100 names. What are the 5 Dow stocks that we've got right here? Apple, Microsoft, Walmart, Home Depot. Home Depot actually improving right here as well, finding some strength over the last couple of days. Apple has had its big run here in the last few weeks as well. A little bit of a pullback on Apple, Microsoft. Also, all of these companies that are dealing with AI and infrastructure and the interaction between us and our devices, those guys really have the mass eyeballs. And a lot of these other ones are supplementing these stocks, NVIDIA. So this is your, Pure Storage, your core group of names that continue to work right here. And let's see what PLTR is doing today. That's back up into the momentum zone there as well. Keep an eye on this list, and really even the smooth sailing list. You get a little bit larger cap names in here, and those are going to be the ones to keep an eye on right here. Very selective, very, very selective in the stock picking, and a lot of these ones that are really quality names have had massive run-ups. Okay, so again, we're at the tail end of this bull market rally, and we're at the extreme upside as well. So what we don't want to do is we don't want to throw caution to the wind right here. Okay, we don't want to say, yep, everything's going up because of AI, or everything's going up because of interest rates, or everything's going. We want to make sure that we're understanding the risk that is on the table, that we're dealing with, the percentage of the portfolio that we've got. So in this case, that naturally pulled us back down a little bit, getting stopped out of 3 trades today, but it dropped us down about 1%. We haven't had much gain on that because we get some real big winners. We've got a couple real big winners that are continuing to work, and then we get 2 or 3 that get stopped out. And that's kind of the market conditions that have been happening right here, where you're getting a handful that are working and those continue to work, and then we're getting a handful that are stopping back out. So it's creating a relatively flat market environment. Now, when you look at these indices, and we're looking at stocks we're looking at ETFs and markets or indexes like S&P 500, it's not an equal weighting. You have to understand that the S&P 500 is weighted towards, I think it's market cap. I'm not 100% sure. I'll double check, but it's weighted towards the larger companies in that indice. So same story here. We're getting back to a core group of stocks, maybe 100. Okay, 38 stocks in the NASDAQ: NVIDIA, Broadcom, Micron, Western Digital. And then you throw in a couple of retailers, which is interesting, where you have Ross Stores in there, and you've got, you've got really just some interesting names. These are kind of the who's who out there right now. And Adobe, Autodesk, Checkpoint, even Hasbro. That's interesting. It's not ranked very well. Okay, we still want to see something that's in the upper end of this rank. But that's telling to the market conditions, and that's what we want to be paying attention to, is what are the overall market conditions. And just to reiterate, what do market conditions mean? Typically, market conditions mean, what is my allocation towards the equity market? What percentage do I want to be included in the equity market? As of right now, this portfolio is saying about 25%, 30% in equities, and I probably will start to whittle that down as well, selling some additional losers and probably taking some of these gains as well, and making this a little bit smaller so that we're dealing with we're in a position to be able to ride a downturn or ride some additional volatility to the downside. Okay, so that's the overall market perspective where we're at right now. It's just not looking fantastic. The participation definitely needs to be a lot wider in order for it to be sustainable. That being said, we could certainly see S&P 500 move higher as long as those 100 stocks that are moving it higher, those 80 stocks that are moving it higher continue to be strong, and these 30 or 40 stocks continue to be strong. And in the Dow hasn't done very well at all. The Dow has actually, in fact, let me come back here. The Dow has been quite weak. So in comparison to S&P 500, in comparison to NASDAQ, you can see how much weaker the Dow is. And that's because the Dow doesn't have any of those big high flyers. It does, it's got Microsoft and Apple, and that's really about it. And everything else in the S&P and the NASDAQ are related more to the AI play, which are going to be chips, mostly chips and infrastructure, and anything to do with chips and infrastructure is where the money is rolling into at this point in time. Okay, again, bond yield curve. We know that this is going to rear its ugly head at some point, and that is, this has to be, long-term rates or short-term rates have got to come down. The issue that we talked about before, if the Fed starts to cut rates and because of a weaker economy instead of lower inflation, then that's a negative thing. Okay, so right now, the idea of cutting interest rates has been a positive thing, because cutting interest rates means that inflation is in check. Well, if inflation is in check and they have to start cutting interest rates because the economy is slowing, then that's a different scenario. Okay, the stock market is not going to like that scenario, and it's already happening. It's already starting to roll over in terms of the kinds of stocks that are working right now. There's a last few that are hanging on, but the rest of them are already starting to be weaker right here. It could happen quickly too. So I definitely want to pay attention to how these uptrends, watching for maybe a blow off top and a reversal bar. Inside of this range, we also have summer. Summer can be particularly volatile. So a point being, lots of cash, really specific on the trades, smaller position sizes going in, or sideline. Okay, I wouldn't necessarily be looking for anything inverse at this point quite yet, because any pullback is probably going to be a buy the dip scenario. If we do get a pullback to here, back to here, more than likely we'll see some kind of a bounce or retracement, at least on S&P 500. Maybe not. We're not there yet, but we're at the upper end of this range. Those are really kind of the market conditions as of today and as of right now. We also have, if we look at sectors also tells us an interesting story of what the market is doing. We have the vast majority of sectors that are in downtrends, a couple that are in between, and only a couple that are in uptrends. And technology, obviously, with the highest rank and doing the best as of right now. Commodities, we're seeing oil strengthen right here as well coming into the summer. Oil typically will have a rally, but again, oil rallying and markets weakening, stock market really consolidating on a handful of stocks, and oil increasing, interest rates. There's it's this climb the wall of worry. We hear all of these different scenarios of the stock market climbs the wall of worry. Well, there's not a lot of worry yet. There's still some things that are in the market that are causing some concern, but we'll see if we get it, this next earnings round that we get, and some of the perspective of some of these companies that they're dealing with right now. So USO climbing, we saw gold, which is relatively flat, silver, which is relatively flat right here, but still in that upper range, could correct around that 382 level. And then also gold sitting right here as well, right on the underside of that 382. We'll see if gold and silver find some support, or if they also are going to retrace back down a little bit. So that really is the 30,000 foot view right here of market conditions. We've got a lot that are on the weak side. We've got the ones that are strong, that are really extended to the upside as well. We could see some profit taking on some of those names. We could see a real big flush of money going into all of these names right here as well, that might give one last push to NASDAQ and the Qs right here, as money is flowing out of the weaker names, the more speculative names, into the actual infrastructure type names. Let's jump over to, I really didn't have any specific real content today. I just mostly wanted to talk about market conditions and some of those perspectives, really understanding that what is happening here with breadth, where the breadth is just simply the fact that we don't have a lot of that participation like we've been talking about. This number right here, okay, this is 90%. We have 90% of stocks essentially in uptrends. Now we have 82. As the market is continuing higher, we're getting less. Now we have another run up. We have less stocks participating in uptrends. Now we're about, less than 50%, but the markets still are in uptrends, but the market's still moving higher. And again, we know why. We know why, because of those groups of stocks that are so strong right here, and their market cap weighting in the index. Still, let's go back. So again, let's just portfolio management in terms of what to do at these levels. Raising additional cash, we've talked about that. How to raise additional cash on your current holdings. Start at the bottom and start weeding out. Okay, make sure those stop losses are in place. Make sure you've got them where you want them, so that you're not risking any more than you should be. And typically, that's going to be, we're starting to see a lot of stuff start to retrace. Typically, that's going to be right around that 382 level. This uptrend here, the support line. As stocks are trending higher, we can set stop losses inside of these ranges, allowing them for a little bit of support. This may want to retest back down in this area, but a pretty ugly day for a little bit more aggressive names right here, which is really interesting. We definitely want to use today as an opportunity to pay attention to the portfolio and the positions, because things are selling off so hard, really across the board. I shouldn't say across the board, but the weaker names and more speculative names, or these stocks that have had these real big run-ups, are they're all falling off the table right here. And let's just take a look here at some of these names in this new buy list, because you're seeing form factor. So we did add form factor into the portfolio today. That one's off to a decent start. But again, if we get some selling starting to happen here, a lot of these could also come down as well. At SMCI, some strength. Those are in semiconductors, and even some of these consumer names like Dick's Sporting Goods, which has done very well. Big gap higher. There's a handful of names out there that do look good, and they're mega cap, and they are related to chips or infrastructure in some way. Let's jump over to let's talk about really, that's the core. That's really the takeaway today, is portfolio management, stop losses, trimming up the risk associated to a portfolio, which means selling winners and selling those overall losers. Currently, not a whole lot more to go over in terms of what's happening in the marketplace right now. In terms of looking for additional ways to manage risk, that's process number one. selling losers, reducing the size of the winner, and then also considering additional ways if you're looking for inverse ETFs or looking for some kind of a hedge against downturns. There's lots of ways to protect against that as well. In fact, let's take a look. The only issue with these two ETFs that I've got listed here, SPXS, SPXS, and SQs, are that those are the two strong indexes. Okay, so if we look at these S&P 500, if we think S&P 500 is going to go down, then this would be one to buy. When S&P 500 goes down by 1%, this goes up by 3%. It's inverse and it's leveraged. Okay, so it's a negative 3x, which means that if S&P goes up by 1%, or excuse me, if S&P 500 goes down by 1%, this is going to go up by 3%. Okay, so that could have a pretty decent run if S&P and the triple Qs start to show some weakness right here. So just like this is extreme to this direction, S&P 500 is extreme to this direction. It should be exactly opposite or very, very close to it. And it's got the 3x. So you're going to get a leverage. You'll notice this is up 0.22. And if I go back to this one, not quite 3x. Again, it's not exact minute by minute, but overall it is. So those are a couple ways to be able to look for easy hedges. You don't have to have margin. You don't have to have a put option. You don't have to have really anything. You buy it just like you buy a stock. And if the market keeps going higher, you also run the risk of this keep going lower. Okay, but we're starting to get to that extreme. The reward to risk right here may start to be pretty attractive, at least for a hedge, or at least for a smaller position, or even the same size of a position as if you're adding in as a holding. To that 2% or maybe a little bit higher, maybe 2.5% could go towards an inverse ETF if that's something that you're considering, versus cash. Okay, there's nothing wrong with cash right here as well. This is the triple Qs. As the Qs are going up, this is going down. So at some point when that Q's trade reverses and starts to pull back, this is going to start to move back up again there as well. I think I'm going to end on that note today. I appreciate everybody's time and effort, and keep a close eye here on the markets over the next few days. It's going to be interesting for sure, particularly with the weakness that we're seeing in the breadth. So we'll watch those major groups, see if they start to get any weakness here as well going into the next few days. Thanks a lot, everyone. I appreciate your time and effort, and we'll see you next time. Thanks a lot. Bye now.